You all know me. My name is Akshaya, just a fellow Sidebar member, doing currently startup advising and just recently moved back to the Bay Area. I am so honored and it's such a pleasure to have AK joining us today. And I already mentioned he's a growth legend of sorts. He is a seasoned entrepreneur, investor, and growth strategist. And AK has been a product and growth leader with over 20 years of track record, which I think is incredible. He's scaled a lot of really fun technology businesses. He's also founded and sold multiple startups, and he's led SMB products and SMB growth specifically at Facebook ads. So if you want to get into how to think about growth and ads and monetization and all of that fun stuff, I feel like we have the expert in the room here. More recently, he's been fractional head of product growth marketing for some really high growth fintechs and AI first product companies. So his expertise really leans into building growth systems, and I think that's really what we'll dig into a little bit today. He's also very famous for launching new revenue lines. So talking about expanding into new customer segments, going to multi-product strategies, I think are all really valuable topics we can dig into. And so let's jump right in. AK, such a pleasure to have you here with us.
I'm so happy to be here. Hey, everyone. Good morning.
Alrighty, I'm going to stop sharing so we can have all the focus on you. Okay, so AK, let's start with the absolute top growth 101, at least the way you think about it. And I would love to kick us off there. When you evaluate a company's growth strategy, what are the most telling indicators to you that whether the strategy is set up to succeed or succeed to fail?
Yeah, I think so. Great question. I think how a company thinks about growth actually tells you a lot about the company. And I think before you even get into strategy, really, and I think Elena Verna said it really nicely. She said, if retention is broken, growth is fake. And I think why that is so sort of paramount to kind of think about is because I think a lot of businesses have different kinds of growth challenges. And I feel like the ones that are almost the most dangerous and hard to fix are the ones where you're actually really good at acquisition, but you don't have a retentive product. And so, that's sort of bad for a few reasons. One, obviously, if you're really good at acquisition, that means you're getting in front of a lot of people, but you're not converting that into, high value customers. And so, there's this classic saying, you're burning through the forest. And I think that's very real, because, if someone uses your product once and they don't want to use it again, then even if you've changed a lot of things and you fixed a lot of things, it's very hard to get that person's attention again because they're like, I've used this before. It didn't solve my problem. I think for another reason, high acquisition companies tend to actually be pretty good at marketing and paid ads. And of course, if you're spending a lot of money but you're not retaining, then you're burning through your balance sheet, and I think that can be pretty dangerous as well. So I think the first question, even before you get to growth strategy, is probably like, what does the growth system look like in the company right now? And I think there's a lot of people that maybe talk about funnels versus loops, and I think they're all very important. I think if you're not thinking about your growth system in terms of acquisition and activation and retention and referrals and revenue, then you're probably missing on some pretty interesting insights that can help you understand the overall health of the system. But then you should also be thinking about loops. These things work together to try and drive your acquisition and your activation and your referrals and et cetera. And so I think before you even get into strategy, it's kind of like what's going on right now? Where are the biggest bottlenecks? Where's the friction? What's sort of not performing to expectation? And I think kind of teasing apart those details tend to lead to the biggest opportunities.
I like that. And I also think one of the things that you hit on is like how to avoid the leaky bucket problem, right? Like you're getting a lot of paid potential customers into the funnel or the loop or whatever you talked about. But then as you kind of understand what are the core behaviors that actually matter that create retained audiences, I think is super interesting. Okay, then the follow-up to that is like, let's talk about metrics, because I mean, how can we talk growth when we don't talk about metrics, right? So what do you think makes a good metric specifically for us to understand whether that growth system is actually functioning or not?
Yeah, great question. So good metrics matter. It's in a lot of ways, it's kind of it tends to be sort of one of the most defining sort of sets of decisions that actually lead to healthy growth, mindset, culture, and growth performance. And so, what makes a good metric? I think the bottom line is it needs to be really easy to understand. And so if the metric requires, mental gymnastics just to wrap your head around, or a data scientist just to even measure it, it's probably not a great metric to organize an entire company, organization, team around. I think the next thing is like the staying power of the metric. It doesn't mean that you necessarily have to keep it for 10 years, but it's good to sort of imagine, if I did keep this metric for 10 years, does it really align itself with the success of the company? I think it's more of a thought exercise, but you kind of want to have staying power. You want to have a metric that's so meaningful that a team would want to feel motivated, or a team would be motivated, kind of growing it over a pretty long time span. I think the next thing is like, is it controllable? I think there's a lot of metrics out there that we tend to want to gravitate to because we know they're important, but very hard to control. I think a very obvious one is profit. There's so many inputs to profit that it's very hard for any one team or organization to fully run. Sales team can do an amazing job driving revenue, but they can't really control their costs. Product teams can do a really good job of getting signups, but they can't really impact what the ad team is spending. And so probably not a great metric. I think NPS is the one that a lot of teams really like because it has the qualities of what could potentially be a good metric, but not super controllable. A lot of things that are completely out of your control. For instance, if there's an AWS outage and you go down for an hour, your NPS that month is going to be terrible. Not a great metric to really go off of. So I think how controllable the metric is very important. I think another good quality of the metric is hard to game. And so you don't want to optimize or maximize one metric at the cost of something else that is actually probably healthy for the ecosystem. So this is sort of to avoid like short-term thinking or too narrow of like sort of tunnel vision around a metric. And so I think as soon as it becomes gameable, people will game it, especially if you tie bonuses and incentives to that as far as like the employee performance goes. People will find ways to game it. I think another thing is like just going back to measurable, being able to measure it on the right sort of frequency. NPS, again, maybe a good example. If you're doing an NPS survey once a month or once a quarter, you only get that feedback once a month or once a quarter. I think at the end of the day, you really want a high velocity growth team or a high velocity growth motion. And velocity largely is driven by how quickly you can measure that metric. I like daily metrics. If you want to take, a period of time, so let's say a week's worth of data, then do like an L7, but mapped daily. And so you can get that week's worth of data. You can normalize things like weekends and spikes and holidays, but you still get a new metric, sort of, or new data point kind of posted every single day. It is sort of, a little bit diluted because again, it's an L7, but it'll be a cleaner line, smoother. You'll get to see trends a little bit more obviously. But the more important thing is that it's every single day you get that published. And so if you did something yesterday and you shipped it, you should be able to see it tomorrow. And I think when you get to that level of sort of speed in the feedback loop, you'll just get people thinking, moving faster, coming up with ideas faster. And I think that's pretty critical to a good metric. What else? Good metrics are decomposable. So, there could be a North Star metric. That's probably the one the entire org or company really rallies around. But every single product team inside of that company should have some input to that metric where they can say with certainty that if I move my metric, we're probably going to move the North Star metric. And so really trying to understand like what are all the inputs, kind of mapping it out. There's usually not more than like half a dozen at most key inputs to any kind of major metric. And then that's actually a good forcing function for organizational structure. Because if you have a pretty good distilled list of the six major levers or metrics that move the North Star metric, that's like six teams or six projects or six organizations, which I think that's a data-oriented kind of culture where everything maps to data and everything maps to some North Star. So I think how decomposable the metric is super important. And I think maybe the last one here is just like, it has to have enough volume. Like at the end of the day, when you're trying to like do an A/B test, what do you need? You need experimentation power. You need to show stat sig results. And so you can have a great metric, but if you're not getting sort of the frequency or the volume of activity around that metric, then you're waiting weeks to get stat sig results. And so even if it's a daily metric, you're kind of not getting the benefit of the speed if it takes you weeks to figure out what's actually moving it. So I think that's probably the last thing that's really important. Like, if it's not meeting some threshold of, X thousand events sort of a day where that changing that by 10% would probably yield stat sig results within days, maybe not the right metric, even if it checks off all the other boxes. And so I think that's probably the last point. Actually, one more thing. I think this is maybe a little bit controversial for anyone who's done like conversion rate optimization. But generally, I prefer counts over averages. And so something like CTR, I think feels like a good metric. Like if we can just get the conversion rate up by 2%. But I think there's just a lot of unhealthy ways to do that. So for instance, I think like the famous one in sort of fintech when you think about risk and sort of compliance, like what's the best way for a financial services company to have zero risk? Well, have zero customers, and so like I think you get the right good rate, you get 100% no risk or 0% risk depending on how you look at it, but you don't have any customers. And so I think you can really kind of hide the effect of the underlying sort of data when you look at just conversion rates. It sort of hides the impact of the head, kind of gives maybe the long tail a little bit more importance than it should. And I think that's where all the nuance is. And so counts are generally better. So if you're trying to mitigate risk in a financial service organization, what you're really trying to do is like maybe reduce the number of ATOs, like account takeovers, or increase the number of at-risk transactions that have been flagged proactively. But like those counts are probably going to be a lot more effective in a system standpoint than a conversion rate, which tends to hide some of the detail. So happy to dig into any of those, actually, but I think ultimately the metric really matters.
Yeah, I think there's so much gold in there, and I think it kind of reinforces a couple fundamental points, which is like what you measure and what you're incentivized on truly dictates like the culture of the team, the way they experiment, how fast they can go, and the quality of the output. And I think you summarized it really, really well in terms of all of that. And I never thought about it this way, but I do agree. Like, I feel like things like conversion rate, like you have so much to play with, like the numerator and denominator effectively, that it can really easily put teams into optimizing for the wrong things for the wrong reasons. And then it bites you way later versus realizing, like everything looks good at the upfront, and then you lose the fundamentals of what it is. And I think it reiterates what you said. Just keep it simple. If it's simple, memorable, it's easier for everyone to measure and make sure that it's the right thing for the business. Love that. Again, I'm going to, I have one more question to wrap up this strategic 101 piece. But I saw a couple really interesting challenges come up. So I'm going to give you all a heads up. Shalini, I'm probably going to put you on the hot spot next for you to share your growth challenge. Nico, you're also welcome to share if you want to get into that. Or I really liked, okay, Michelle, I think you have a very relevant one coming up as well, where you're transitioning into a new role or org, and there'll be challenges with prioritization for impact and so on. So just sit with it. I have one more question, and then we'll move over to the live problem solving section of this. Okay, so AK, we talked about high level strategy, we talked about metrics, and I think the fundamental thing that comes to me next is the culture and the experimentation mindset of the team. So, in your experience working both fractionally and as head of product for a bunch of these different companies and organization, what are some telling indicators that consistently differentiate teams that execute really, really well against their growth strategy versus those who struggle with the execution pieces? And I'd love to get some like some lessons that you've learned through the way as well.
Yeah. Yeah, I think growth culture is a real thing, and you can have the great growth teams and great growth engineers and be in an environment that isn't really a growth culture and not be very successful. And so, I think maybe another way to kind of think about the question is just like what are what's sort of the environment where growth really can excel. And I think when you think about it like that, like there are some kind of obvious tells that maybe this company isn't ready for growth, and so I think maybe the most obvious is that data isn't something people talk about regularly, and again, this shouldn't happen in a silo at the sub team level. It has to happen at the CEO executive level, and these things tend to trickle down. The more importance the CEO or leadership puts on metrics and choosing good metrics and communicating those metrics, it's almost a little bit contagious. Everyone starts to think about, well, how do I move that? And I think as soon as you have that culture, growth starts to become a little bit more natural. And so I think it's talking about metrics, and so maybe like what forums are the right forums to be introducing that into a culture. I think the obvious ones are like the all hands, taking that North Star metric, taking maybe a couple of the key drivers of that. What's the performance over time? Letting everyone understand, what's working, what's not working. I think that definitely helps. I think you don't have to wait till an all hands to kind of get a lot of that socialized. I think at the end of the day, people need to be looking at dashboards. I've joined companies that were over 100 people that didn't have dashboards that the managers, senior managers, ICs were looking at on a daily basis. I think that's a pretty big red flag for me. I think ultimately, people need to care about the performance of the company, and if they don't have dashboards set up and equipped to help them understand the nuances of their different product areas or the different opportunities that the company is making progress on, again, you're just not going to have that growth mindset. I think that maybe the third way to really make this real for people is performance management. This is maybe a little bit kind of controversial as far as what the general kind of thought is out there, but I'm a big believer that your personal kind of professional performance and kind of your evaluation as an employee should be directly tied to metrics, and you should feel the impact that you make on those metrics. And so I thought Facebook did this really well, but if you have a great half and you're moving the needle on a lot of the metrics that are important to you, you'll see that in your rating, you'll see that in your bonus. And so that the more sort of in tune you are with what makes the company grow and succeed, the more you're going to grow and succeed as an individual. I think to me, that's like the holy grail, because you're not making this just a company problem. It's your problem. And I think if your personal financial success is tied to that, you'll just care for those outcomes maybe a little bit more than you would otherwise. And I think that's just maybe human nature. And so these are the first maybe few things kind of coming into a new organization. It's like, does leadership talk about metrics? Is there right instrumentation there as far as like dashboards and maybe not even dashboards? Like, is the data queryable? Like, is the data accessible? Are insights available to people? Does someone have to go through a data scientist just to answer a question? Or can they just, write a query? And I think with ChatGPT, anyone can write a query now. It's very easy. And then three, is there performance management? Is it tied to real business impact? And I think if you have all of those in place, I think you're really ready to grow a growth organization and succeed in a growth motion.
Yeah, I think it's super interesting because the parallel to it is like truly at the core of it, it's good incentive alignment. It's it's almost like it's in your it's in your DNA to look at the data, understand what your customers are doing, understand how the business responds to what customers are doing, and then over time, the learning and the experimentation just get your confidence rate and your success rate just better and better over time, right? Like you truly deeply understand the business in ways that no one else can. I think I mean, it sounds controversial from what you talked about, AK, but at the end of the day, I think it's like a lot of compensation structures are directly aligned with how the business is doing. So I think it's very similar to some of those things, just at a different level, effectively. Um,
Yeah. If I was to maybe just elaborate on that, I think what's controversial is the idea of, I think the opposing argument on this is like, well, everyone gets equity when they join, and so aren't they already kind of tied to the success of the company in some way? And I think that's right, but I think the reality is, and this is maybe what a lot of CEOs have to maybe internalize a little bit, but liquidity isn't like it used to be. 10 years ago. Companies are taking longer to go IPO. Often employees are leaving to their next role before the company even gets to some liquidation. And
yeah.
so I think the pull of equity as like the driving, motivating factor is actually starting to kind of get less and less over time as more people go through multiple jobs without ever seeing it materialize into something. And again, this is like a little bit of a wake up call. Like this is like what the world is like now. And so tying it to real cash bonuses, I think, something that I think more CEOs just have to open up to because there just isn't a lot of other options in a market that is very illiquid right now.
Yeah, it's almost like an interesting retention strategy at this stage.
Hmm.
Nico has a related question, and I think I'd love to address it, and then we'll jump into the problem solving. Nico says, "Do you view tying personal performance to specific metrics encourages some of the wrong behaviors of gaming?" Nico, feel free to also come off mute, say hi to AK, and ask your question. Nico, we can't hear you. I don't know if it's just me. I do see you're
Could be
unmuted.
better.
Yes, there we go.
Okay.
Hey, Nico.
Yeah, I mean, thank you for hi, AK.
There you
My
go.
question is stated pretty clearly in the text. There's definitely this, I've seen this tension between, tying performance to specific metrics sets a lot of clarity, but as soon as you do that, right, it opens up the opportunity to creating incentives that then are good for the individual, not for the company or the team, whether it's gaming or some of the wrong behaviors. So, what are your thoughts on that?
Yeah, I think it's something you definitely have to be sort of eyes wide open about. Some of this I think is just tackled in again choosing the right metric, like and knowing how it can be gamed, and I think some of this is also just like good feedback. Like if you see someone taking sort of like the wrong behaviors to drive something that is probably unhealthy for the company or ecosystem, then either they're a bad actor and you want to provide that feedback to them very quickly and help them understand the implications of that. But I think everything's in context, right? And I think that's the benefit of qualitative feedback being sort of paired with quantitative feedback in sort of these performance cycles, because you can kind of land I kind of see what you did there. It's clever, but we don't do that here. And I think often this comes to like company values. Like if you have really good corporate values and you can kind of tie like why that is the wrong behavior to something a little bit more meta, like company values, then it sort of provides everyone like the guidelines. Like you can move this metric given we're going to operate within our company values, and then that maybe it becomes a little bit more difficult to game. But I think definitely something that people should be super considerate of.
I guess my only comment is I've been, as soon as you tie people's performance to specific metrics, think about sales organizations, then they're, naturally very incented to move that metric, which can be a very good thing. And even with malintention, if you can increase your paycheck by moving this metric, it's not necessarily, a bad thing, but you will have certain incentives inherent in that structure which are, as you said, you need to balance.
Yeah, Nico, but this is why controversial topic.
Yeah.
Lot of good counterpoints.
Okay, we're now going to transition over to the live problem solving. All right, Shalini, how are you? Are you ready to come on? And
I'm here. Yes, I'm good. Hi.
hey, welcome, welcome. Great to hear from you. We would love to, wait, let me make sure. Yeah, we can hear you clearly. Are you in video, Shalini, or you
I am
want?
not. I'm sorry. I am driving, so I have to
No problem at all. That works.
get to the office to deal with my office challenges. But
Okay,
I will.
fantastic. Let's try and solve it for you as you're driving. So
Sure.
Shalini, do you just want to share really quickly what your challenge is, and we can see how
Yeah.
I pitch it?
Yeah, so I actually work for a large company. And so I think a lot of the challenges that you just mentioned, like we have a lot of the same ones. Like we have like the siloing, the lack of data or good data sometimes, lack of clarity, the tech debt. But my big challenge, and I work for Invisalign just to give context, right? And so our big challenge right now is that we own the adult orthodontic market for people who want to get braces or fix their teeth as an adult. We do not own the kids and teens market, and that is, of course, what you think about when you think about orthodontics. That is our big challenge, which is, we know that the market has a ton of potential and a lot of room for us to grow into, but it's very difficult for us to grow into that market and have it and become a leader in that market. There's a lot of various reasons. One is just awareness. One is a clinical belief from the doctors of, but your stuff is good for adults, and I didn't think it was good for kids and teens. Pricing is always a challenge. Everything happening with tariffs is probably going to be a challenge. So I'm actually just switching into this role to be responsible for this whole kids and teen strategy. And so when we know that simply competing on price is not always the answer, we want to look at more opportunities of what is it that we need to do better? How do we put our arms around even where to start with this?
Cool. Yeah, really fun question. I think definitely some different ideas come to mind. And so I think what's great is that there's already sort of market leadership in a segment, and so you don't have a cold start here. There's reputation that has kind of been established, and there's some maybe brand familiarity in the market. I think the thing that comes to mind immediately, without sort of spending too much time dissecting it much more, just to give you some general quick reactions, is every kid or teen has an adult parent in their life, and I think there's probably some insight there that to me would be one of the first things I would explore a little bit. And so these adults, do they that you're already servicing, how many of them have families? How many of them are thinking about having families? Are they parents? And could they potentially be your channel partner? And if you are basically, rather than going to market in what sounds like a pretty crowded market and trying to be like a new offering against all of these existing ones, can we just make sure that anyone who's an existing customer, their kids or their cousins or people in their family think of you first? And so it's cheap because you already have that customer. You can communicate that to them effectively. And basically what you're doing is you're allowing them to kind of be your referrer, essentially, to a network where they have a lot of influence, which is their family members. And can you maybe do that in a way that's not incentivized is probably my first approach. But can you do it in a way that is incentivized? It would maybe be my next approach, to give them a little bit more motivation to do it, because maybe every time they refer their kid, their nephew, niece, etc., maybe they get something like price reduction in their service, or some value add service, and so there's this really nice kind of incentive, because at the end of the day we're all humans, and incentives really tend to kind of encourage behavior. But can you find that right incentive that doesn't break the bank, but allows them to be it's essentially your customer acquisition cost is the incentive that you give to them. But I think maybe, Shalini, that's sort of the first place I would sort of think I would think about. How do I use my existing customer base
Right.
to sort of attack the maybe the adjacent customer base or the new customer base.
Yeah, and I think that sounds really interesting because I think that we have sort of thought about this in that we know that like for the teen market that the parent, the mom is the person who's the influencer and the decision maker, but I don't know that we've thought about it in terms of family discount, family program, family pull through. So that may be a really interesting aspect for us to go check out. So thank you for that.
Yeah. Yeah, no worries. Yeah, we've seen it work in a lot of other places. Like I think you know, probably like the telcos are probably the most successful at this with like family bundles. You know, I think yeah, you've been seeing it in Apple products now. You can kind of share your Apple Music membership, and so you know, I would probably even look at like what are comps in completely different industries where this idea of pulling in one more family member sort of exists, and then you get a lot of the design patterns and verbiage and triggers, and just apply it to kind of your industry. But I'm glad that was helpful, Shani.
Amazing. All right. We have another challenge coming up. Shalini, thank you so much. Drive safely, and hopefully this gave you a couple insights to go solve the minute you get into the office on time. Prayas, I know you had a startup growth type of, startup growth type of challenge. So do you want to come off mute and share your challenge, and AK is here to solve it?
Recording in progress.
Give me 1 second. I'm having some laptop issues.
No worries at all.
I'll go next. I'm kind of, my laptop's frozen.
Okay, then let me ask, is there someone else who wants to jump in and ask another question? Michelle, oh yes, I was just thinking about you because I think you had a very relevant question to share.
We're on the same team. Hi, thank you again for today. So yeah, mine's a little bit more about kind of the influence of the healthy growth culture mindset. Looking at companies, you and I probably cross paths at Facebook. I'm going into T-Mobile as a chief of staff across 3 big business units. So we're talking about prioritization. Everything is top priority all the time to everyone. Metrics help, influence helps. What other thoughts do you have on like innately instilling a healthy growth culture mindset at such large organizations when I only can talk to so many people? What are your thoughts?
Yeah, good question. I've definitely found myself in a similar position, especially coming in as like a fractional leader. You don't have like a tremendous amount of influence, but you're expected to sort of move the needle very quickly. You know, I've used a very rudimentary approach here, and I think it's been quite effective. But I think sometimes you know, the challenge when you have a lot of competing priorities is that they're all kind of opaque, where maybe you know all of the competing priorities, but no one else really knows them. And so like you're struggling with all of this in your head. And I think, you know, for me, what's worked really well is actually just like spinning up a Google Sheet, writing all the priorities out, you know, describing like what it is, and then looking at it across a couple of different vectors. So, you know, I'd look at it across of like, you know, impact and you know, generally, you know, I try to like give it just, you know, a low, medium, high kind of rating. I'd look at it on like effort, you know, low, medium, high rating. I'd look at it in terms of like cost or, you know, the resource sort of resources required, low, medium, high. These things, and then I would sort of socialize that. And it's like, this is everything we have on our plate. We can't do everything, you know, let's do the top 3. And I think if you get everyone's help in determining the impact, the effort and the cost, and that becomes more of like a social exercise, you actually build trust really quickly, because like, oh, this person's coming to me to get my point of view on why I think this is important. And then if you get everyone to contribute, now you have this like really nice artifact that, you know, maybe a dozen or 2 dozen people have actually contributed in some shape, way, or form. And then when it comes to the ranks, you know, ordering of that list, they're like, okay, I can see why my thing doesn't necessarily meet the kind of the threshold of being in the top priorities. And I think there's just a lot more empathy to like, okay, this person went through this exercise. They've really considered the impact of all of these things. They've put everything against each other to prove that they're just not all equal, and we have to make some hard decisions. And then we sequence them, and the sequence makes sense. I might disagree with some of the sequencing, and I'll give my input, but for the most part, it's like a socialized process that that I think people can tend to feel okay about at the end of it, as long as they know where they sit on that process. And sometimes what this and this was maybe the biggest surprise coming out of this doing this recently, is sometimes you realize that there's things on that list that shouldn't even be on the list because they're just so far down. It's like, this is way too expensive and the impact is so low. Like, why are we even talking about it? And as soon as you can get people like erasing things from the list, you know you're getting to a good spot quickly.
Super helpful. Thank you. And yes, I agree with everything you're saying. Wish me good luck. I'll report back.
Cool. Good luck, Michelle.
I mean, good luck, Michelle, and hopefully people are erasing things from that list, because I completely agree with you. Getting the noise out of there is like some of the best wins you can ever have.
I love saying no. I'm like all about like, let's just say no to all of that, but that is a trusted behavior. So I need to work on that. Thank you.
Amazing. Thank you, Michelle. All right, Prayas, I
I'm
see
happy
you.
to go next. Yep, awesome. You can hear me, right?
Yes,
Yeah,
perfect.
loves it.
Cool, perfect. So just a little background. Used to be a startup founder maybe around 10 years ago, and been with Amazon AWS last 10 years. I've honed my product skills, so I love being leading product, driving strategy, but within this whole nice shield of a huge, massive corporate that of course has seen a lot of good growth. So that's been great, but I'm heading back into the startup space, and that is what my message was, which is I'm co-founding a startup for asset allocators, or let's just start, that's a broad term, that's a broad TAM, so to speak, but focusing on the space of GPs who want to find founders, who want to find startups, and who want to get ahead of the curve before a startup even is announced, right? Founders who are in stealth. Imagine a heuristic being you see a student pass out of Stanford, rock star, but they haven't yet gotten a job, or they're not actually taking up a job. Potentially they got offers lined up, but they probably are not yet excited to go into it, but maybe behind the scenes they're thinking of startup, right? So when could potentially a VC get in and maybe invest in them or that startup ahead of time? So kind of and there's a lot of competition on deal flow, right? So that's one aspect of it. That's broadly what we are trying to target. A lot of use cases in various industries, we can get into that. But what we are rolling out with is, so this is built with AI ground up with speech to text and all those aspects where Clara, we're personifying it, goes out and calls a founder and says, hey, looks like you're blah. I'm actually here scouting for VCs. Would love to hear your story. I already know a lot of data about you. LinkedIn, PitchBook, Traction, all of these different platforms give you enough information about individuals or maybe serial founders. But tell me your story. What are you up to? What have you been working on? What's exciting you? Or maybe if there's a concrete startup you're working on, give me your story, right? What's your pitch? You have a conversation, maybe attached decks, all of that. And then from there, Clara goes and builds a deal memo, right? It's an exhaustive deal memo. Over time, we plan to use it to map to individual investment thesis that VCs have, right? So that's the whole mechanism. That's more of a later thing. But we're going to market with this approach of just creating supply of deal flow, right? Focusing on supply first and then maybe demand side. Well, and you can obviously look at it from both sides, but just want to jam on what's your thought on scaling that. The way we are thinking of is really go to three key markets where startup activity is going on, right? One is India, UAE, and US, of course, right? So that covers maybe around almost maybe 1 million or so founders to start with. We have all of that data to reach out and kind of mechanism to set that up. We're going to really do a roadshow soon to start doing fundraising, but maybe we want to start with a product-led growth approach. So what would be your suggestions for that?
Yeah, Chris, super interesting. Thank you so much for the overview. Yeah, I feel like a couple of things, quick reactions. So kind of this is a space I've sort of been close to for a very long time. Ran a kind of an incubator out of Toronto, co-working space, invested in 40 plus startups, and I think over time the age of these founders is probably getting younger, but the sources of the deals are actually the same. And so I think there's actually something interesting here that's like reliable and repeatable playbooks for growth. And so like, what do I mean the sources are generally the same? Well, where do I tend to kind of see some of these youngest founding teams? It tends to be in a couple of places. Like one, schools, and so schools have innovation competitions, hackathons, sort of these types of kind of programs where they want more industry people at those as judges or spectators or mentors to support the startups. And so could be really interesting. Again, don't know exactly how I would execute on this yet, but it's just like how would I make sure, Prayas, that like my AI is in every single one of those rooms? And so could they be a participant in all of these hackathons? Could they be of an AI judge, which is like a bit of a novel thing that you can pitch the hackathon
Yes.
sort of organizers. But like, I really kind of think, and you're so early that it's like do things that don't scale, I think really applies at this stage. But like, how do I just make sure my AI is in every single one of those rooms so that there isn't a student competition, whether it's 20 people or 1,000 people that I don't have some exposure to, and then you start going through all the lists because a lot of these tournaments or hackathons are annual, and so you can get a pretty good list of the high target ones right away. So I think that's sort of one thing. The second thing I would kind of, or the second source of these of these startups tend to be sort of these after school programs that I think there's several of now emerging, but they're sort of programs that sort of expose young people to emerging technologies. I think the one, I'm from Toronto, so like the one that comes to mind for me is called the Knowledge Society, TKS. And I think collectively their students have raised like over $100 million, and these tend to be 13 to 17-year-olds. And so a couple of good partnerships with these types of institutions, and they operate all over the world, so they might actually be a good partner, and I'm happy to connect you guys offline to the founders there if that's helpful. But yeah, there's probably a couple of these organizations that actually are already a magnet for young people, and really, your job is to kind of build those partnerships and get in front of them. So that's maybe the second thought that comes to mind. The third thing that maybe would just maybe aid in a little bit of a research process, if I were in your shoes, is just like you're not the only one looking for people at this stage. And I think there are successful sort of institutions or funds like Dorm Room Fund comes to mind. They found Cursor when it was just a few kids in a dorm room, right? Like that's pretty impressive. Probably one of the biggest success stories of recent memory. And that was Dorm Room Fund that was a part of their sort of pre-seed. And so I would hang out with them and figure out like what are they doing right, and how are they finding these people? And I have to think that there's probably something there around just campus presence that is pretty important to their strategy. But maybe just another sort of idea on maybe where you can learn more about what's already working for people.
Oh, that's phenomenal. I love those ideas. I would definitely take you up on potentially connecting with someone at TKS. I love the idea of the AI judge in a room, right? Kind of being the fly on the wall. One of the angles we were jamming on was we're going to listen to a bunch of pitches, right? Assumption is, founders will be like, okay, this is something cool. Let me share my story. Over time, we identify pitches that become successful and the ones that don't, or pitches that are comprehensive that result in an exhaustive memo where the founder is detailed enough, specific enough to provide or fill up their entire memo structure, so to speak, versus ones that don't. And the ones that don't perhaps have a great idea, but just don't have the pitching skills. So probably having some AI coach that helps them over time. But I love the flip side of it, which is how do we be in that room? Maybe engage with the participants, the judges, or the spectators to kind of, record a pitch in the room itself. So that could be pretty interesting. Yeah, love those. I would reach out to you, AK. But thanks a lot for those ideas. Super, super
Yeah.
exciting.
Yeah,
Cool. You bet.
huge plus one to the whole AI judge idea. I think it's such a valuable way to one continue to learn, like what are the different pitches that are actually successful, where are the areas of improvement, and it benefits everyone in the room in really interesting ways. So AK, that was amazing. Love it.
Awesome.
I have one more question, and I think Kurt asks a really generic question, which I think we'd love to get your brain's input on. Kurt, are you game to come off mute and share your question yourself?
Yes. Hi. Nice to
Kurt.
see you again,
See you again.
Akshaya.
Yeah.
Yeah, thanks for the talk. I think so I'm kind of in this weird mode where I've done a lot of business development over the course of my career in finance and stuff like this. And now I've gotten into like working in some really early stage companies. And some of them are just, they're not as, I would say, uh, sophisticated as you. They haven't followed the growth playbooks of Reforge and things like this. And so I'm like actually like getting my hands dirty now on like, okay, how do we actually grow this thing? And how do we like, what variables should we be looking at? Like, is there like a spreadsheet we should be, a formula we should be following, saying, okay, let's track these. And uh, it just something really simple and easy where we can put something in place and just start working against it. Uh, do you have any ideas? I mean, I'm sure the stuff you've done is extremely complex and lots of variables and big spreadsheets. And we just want some simple things to start working on.
Yeah, I think probably the go-to, and this has been the go-to for over maybe 10 years. So I'm sure you've probably come across this, but I think still very important and relevant is called the R framework, AARRR framework. And it's just making kind of mapping things to acquisition, activation, retention, referrals, and revenue. And it's designed as a funnel. Which I think is fairly intuitive, and you have conversion rates at each stage, which gives you things to optimize. So I think just starting there is probably good enough to kind of get some lay of the land on like where are we failing and where do we need to improve. I think the second thing that I think a lot of early startups sort of get wrong or maybe not so much get wrong, but like underestimate is that distribution tends to follow power laws. And so it's not about coming up with 10 acquisition strategies. There's actually probably one that's going to drive most of your growth. And I think this is something that a lot of teams kind of get wrong. It's like much better to go deeper on one channel and really own it and master it and then get a bunch of shallow channels and then try to hope they can all kind of add together to something meaningful. And I think ultimately what happens is you stretch out your team, you don't get great at anything. And I think this is just kind of a bit counterintuitive. And so you see this in like DTC a lot. It's like I'm doing really well on Instagram, so maybe I should go figure out search ads next. It's like, well, why don't you just do even better on Instagram? Like, it's probably easier to get more performance out of that channel than to completely learn search and a whole different ad platform and everything. And so I would just kind of figure out like what is that channel where you can likely sort of dominate and really kind of drive 70% of your acquisition. And maybe there's a lot of experimentation to figure out like what that channel is early on. But I think as soon as you're getting a little bit of positive feedback and there definitely feels like this channel has like good product channel fit, then I think you just go really deep on that. And I think at the end of the day, like, forget the framework. Like if you can just find a channel that, you can find your customers. And I think a lot of that also comes down to like, you need to know who your customer is. And that requires like a really great definition of your customer and making it as narrow as possible. Again, a bit counterintuitive, but of course you want your product to work for everyone, but when you're doing growth, you kind of want it to work with someone first. And, even if that's one or two people, then you just go find more people like them, sort of thing, versus trying to kind of please everyone. And I think these are maybe just like the fundamentals, sort of thing, that I think starts to kind of get the growth machine going.
Cool. Thank you. Andrew Chen had this article recently he sent out, basically said, growth marketing is tapped out, right? Like every channel is tapped.
I saw that email. Yeah,
what was your take on that?
Well, I think he kind of makes the point in there that like the product is really important. And I think it was a bit facetious, but like, yeah, there's a lot of competition out there right now. And I think everyone can build an app, right? So like, you're vibe coding your way to market. And I think everyone's hitting the same wall once that app is built, which is like, how am I going to get my customers? And so, I think it kind of just goes back, like, know that distribution always follows power law. Like there's very few companies that have sort of an equal, every channel is sort of equal. Like it's generally one channel has 70% and then everything's scattered across a bunch of other channels. And then if that's true, then like know what your channel is. And there's really kind of three channels, and this is an oversimplification of things. And I think more in terms of consumer, and so this is probably different for B2B, but it's just like it's search, it's viral, or it's paid. And again, like I think the more simpler you think about the growth system, the easier it is to kind of execute and operate on. And so, are you in any of those buckets naturally? Like, Pinterest was naturally in search because users were creating content that was indexable. Like that's a really great network effect where you can just sort of own search. TikTok is really good at viral. It's content that's shareable, and so like, if you can just even pick between those three macro channels, probably a really good start.
Thank you.
Cool.
Take
No
your
worries.
notes.
Okay, amazing. We're 2 minutes to the top of the hour. I'm sure we can continue to keep asking AK questions. But this is the time where I ask you all for feedback. So if you are not already seeing my screen, you should be seeing it now. This is the only time at the entire hour I actually encourage you to take your phones out and then scan the QR code and give us feedback. Like I shared, we're trying a unique format this time where we can actually like live problem solve. So would love feedback on what you thought went well, where you think we can improve, and if you want to see more types of these sessions in the future, with more amazing guests like AK, who are absolute excellent operators in their own right. So if you are struggling to do the QR code thing, I'll make it even easier by sending you a little bit.ly link there. Just click on that simple Google form. Would love your feedback. But even as we say bye-bye, I have one final question to ask AK. And give me a second while I pull this thing out. Okay, AK, to wrap this conversation up, let's move a little bit away from the tech world and move more into the outside world, which I know is a bit of a bubble. Is there a growth lesson that has really resonated with you from the outside world that you consistently apply back to the startups you're advising, the problems you solve every day? Would love to end on that note.
Yeah, good question. You guys have all had very good questions, by the way. This has been a very entertaining hour, even for me, and definitely excited to jump back into work with all of this energy. Yeah, I think honestly, this might be a generic answer, but it's just like, just keep it simple. I think these things tend to get overcomplicated. I think everyone's looking for that perfect framework or perfect model, and I just think at the end of the day, the simpler you think about your problem, the easier it is to communicate, the more effective it is to execute on, the easier it is to measure. And so like simplicity really is this compounding thing. And I think if you kind of like force yourself to think simple, you actually end up getting these really good sort of ideas and levers. And so a lot of time, growth is just like an example of just like how growth can just be so simple. A lot of time, growth is just awareness. And so, what's one of the best tactics you have for driving awareness? It's like entry points. And so if you already know a bunch of users are over here doing something, sometimes just having a link to that new thing is really helpful. Just sometimes making that link green is really helpful. Like, it's just like really simple things that tend to go a really long way. Or if you know a bunch of people are hitting a screen, but they're not completing the flow, it's like, how do you remove steps, or how do you just like simplify it, or how do you use AI to generate answers for them so they're not filling out forms, they're just agreeing that, yeah, this is pretty much it, submit. And like, again, it's just like, I think the more you kind of take this into the everyday, from workflows to processes to how you're managing your back office to how you're measuring things to how you're experimenting, like you can just really try to find that, what's that simpler approach? More often than not, it'll probably be the right approach.
That is an absolute nugget of gold, and it has been such a pleasure to have you, AK, and Sidebar crew. You have been super engaging. Thank you so much for all of those amazing questions, and hopefully see most of you at the Sidebar Summit in person next week. Bye, everyone.
Thanks, everyone. We'll see you next week.
Thanks, AK. Bye.
Bye-bye.